Welcome back to the Malaysia Money Matters show. It's the 10th April 25. We've got quite a mix today. Lots of company news brewing here in Malaysia, plus some pretty major international developments.
Absolutely. It feels like a lot's in motion, both at the corporate level and, well, on the global stage. Let's dive in.
Okay, let's start with the banks. AMBank Holdings, or AMBank as we know it, their group CFO, Shafiq Abdul Jabbar, is resigning, effective July 1st.
That's the news. And his garden leave actually started today, April 10th, so he's effectively out of the office now.
Right. And the interesting part, the buzz, is that he might be heading over to Maybank.
That's what industry sources are suggesting, yeah. To become their new groom CFO, filling the spot left vacant a couple of months ago when Khalija Ismail departed quite suddenly.
Following internal inquiry, wasn't it? So Maybank needs someone, and Shafiq might be the one. Maybank's keeping quiet, though.
Declined to comment, as you'd expect at this stage. It's interesting. AMB's CEO, Jamie Ling, he's a former CFO himself, so he'll step in temporarily.
Okay, so they have cover. But the market didn't love the news, huh? Both stocks took a hit yesterday.
They did. AMBank closed down almost 5%. Maybank dropped nearly 4%. Shows how important these key roles are perceived to be, you know.
Definitely signals potential shifts. Okay, moving on. AEON Credit Service. They had strong results for FY 2025.
Yeah, pretty solid numbers. Receivables up 15%, driven by personal financing, credit cards. Even Superbikes financing saw decent growth, about 20%.
Sounds good on the surface. But CIMB Securities isn't fully convinced. They have a hold call.
Right. Despite the good results, CIMB is cautious. They're pointing to macroeconomic uncertainties, things like tariff volatility, those unpredictable import taxes, and general inflation.
Worried it'll hit customers' ability to pay back loans.
Exactly. That could potentially cap AEON Credit's earnings growth in the near term, even with the strong performance we just saw. So it's a bit of a mixed outlook. Other analysts are more optimistic, mind you.
Okay, so a wait and see from CIMB. Got it. What about Axiata Group and Khazanah, selling their tower company, Adudco?
That's the report. They're apparently looking for a financial advisor now. Adudco could be valued around US $3 billion, including debt. That's a significant number.
Huge. And Macquarie's asset management arm supposedly put in a bid late last year.
That was the rumor back in December, yeah. Axiata holds 63%, Khazanah 32%. Kawap has a small stake too. Adudco's big, over 55,000 towers across Asia.
So a sale would be a major deal, freeing up capital for Axiata and Khazanah. Something to watch.
Definitely. Now, shifting to IPOs, Cuckoo International. They were planning to list, but they're hitting pause.
Yeah, delaying it by about 2 months, now targeting June 24th for the listing. They're blaming, well, global market volatility.
Understandable given what's happening. The IPO aims to raise over RM 470 million, so it's quite large. Delaying seems prudent, maybe wait for calmer waters. They're even letting applicants withdraw.
Which brings us to Sumi Sajana Group. They did list yesterday on the ACE market. How did that go?
Oof. Not great, actually. It was a really poor debut. The share price fell 25% from the IPO price of 24 cents, closing at 18 cents.
Wow, 25% down on day one.
Yeah, apparently the worst debut in 5 years. It didn't help that it coincided exactly with those U.S. tariffs kicking in and the broader market tanking.
Bad timing. Was there much interest beforehand?
Not overwhelming. The IPO was only 1.85 times oversubscribed, which isn't particularly strong, so maybe the signs were there.
Right. Tough start for them. Okay, some contract news. Dayang Enterprise secured work from Petronas Karagali.
Yes. 2 new work orders for accommodation workboats. One's deploying the Dayang Berlian for a long stretch, 975 days, with options for almost 900 more.
That's potentially years of work.
Exactly. And the second vessel, Dayang Pratama, for 244 days with a 60-day option. The value depends on work issued, but it's good visibility for them. Still, their share price was down quite a bit on Monday, too.
Seems like a theme. Dua Pharma Biotech also secured government contracts.
Yep, 3 more, worth about RM 16.6 million. From Pharmaniaga Logistics. This brings their total product supply to the government up to 99.
Wow, 99 products, and the total value is pretty substantial now.
Over RM 682 million, with these new contracts running until the end of 2026, so spitty business for them. But again, their share price also dipped yesterday.
Okay, let's talk about the overall market then. The FBM KLCI, it really tumbled.
It did. Plunged right past the 1400 level, closed down almost 3% at 1400.59. That's its weakest since June last year.
And it was broad-based, right? Not just a few stocks.
Oh, yeah. Big sell-off. 919 counters down, only 224 up. Top laggards included CIMB, Press Metal, Gamuda, really reflecting that global anxiety.
But amidst all that red, Hibiscus Petroleum had some good news.
They did. A really significant one, actually. They got a 20-year extension on their PM3 CAA production sharing contract that's offshore Northeast Malaysia.
20 years.
Yeah.
So that pushes the expiry way out.
All the way to the end of 2047, it secures production, allows for more development, even further exploration. Big win for them. And their share price actually closed higher yesterday, up about 1.4%.
See, good news can sometimes break through the noise. Okay, KIP Real Estate Investment Trust, KIPRE, they're buying properties.
Yes, 4 retail properties in Kuala Selangor and Kuantan for RM 118 million. It bumps up their total portfolio size to RM 1.5 billion. Includes places like Kipmemel Disa Coalfields.
Okay. It's a related party transaction, though, and funded partly by issuing new units.
That's right. So existing unit holders get slightly diluted, which might explain why their unit price was down yesterday as well, about 2.3%.
Got it. Perdana Petroleum also secured contracts.
Yep. 2 3-year contracts from Hess for anchor handling, tug, and supply vessels. Options for another 3 years, too. Values weren't disclosed, but expected to be positive for earnings.
I guess. Share price down.
You guessed it. Down over 5.7% yesterday. Same story. Good company news overshadowed by the macro picture.
Okay. Are any new IPOs still pushing ahead despite the gloom?
Seems so. PSP Energy filed its draft prospectus for an ACE market IPO. They want funds to buy a bunker vessel, expand their ship-to-ship refueling business.
Interesting. And Reach10 Holdings. Their main market IPO is proceeding.
Yes, aiming to raise up to RM 156 million. They're the first Sarawak-based company to list on the main market in 15 years, focusing on fiber optics and towers there. IPO closes April 18th, listing May 2nd.
So some are still going for it. What about Superior Energy? They're still PN17, right? Financially distressed.
They are still working on their regularization plan, but they just secured a RM 40 million on contract for offshore maintenance work in peninsular Malaysia. 6 months plus a possible 6-month extension.
And how did their shares react?
Actually, they went up, gained 12.5% on Monday, closing at 4.5 sen. So the market saw that contract as a positive step for their recovery.
Good for them. Okay, nearly done with local company.
Yeah.
WCT Holdings. Shareholders approved the Paradigm REIT listing.
Yes, they greenlit listing Paradigm REIT and selling 3 big malls, Bukit Tinggi Shopping Center, Paradigm PJ, and Paradigm JB into the REIT for about RM 2.44 billion. It's a major restructuring.
Settled with REIT units and cash. But WCT's share price also fell.
Yep, down about 5% yesterday. And finally, WTech Group, a phone and fabric maker, is also going ahead with its ACE market IPO, scheduled for April 29th, aiming to raise RM 22.5 million for a new factory.
So IPO activity isn't completely dead, despite the Sumi Sujana experience and Cuckoo's delay.
It seems companies with specific plans are still willing to test the waters.
Okay, that's a lot on the Malaysian front. But clearly the big driver for all this market negativity is international, specifically the U.S.-China trade war escalation.
Absolutely. That's the main headline casting a shadow. China retaliated against the latest U.S. tariffs by announcing a massive 84% tariff on all U.S. imports starting today.
84%. Wow. And this is after the U.S. moves brought total duties on Beijing this year up to 104%.
Correct. It's a huge escalation. Global markets reacted instantly negatively. U.S. futures, European stocks all down. U.S. Treasury Secretary Bessent called China's move unfortunate.
Understatement, maybe. And China didn't stop at tariffs, right? They blacklisted some U.S. defense firms.
Added them to their unreliable entity list, yes. So the conflict is broadening beyond just trade. And we heard warnings, like from a former central banker, about the long-lasting negative impact this will have on ASEAN, including Malaysia.
Because our supply chains are so tangled up globally.
Exactly. It disrupts everything. The U.S. Federal Reserve is watching closely, too. Neil Kashkari at the Minneapolis Fed said these tariffs, being inflationary, make it harder to justify cutting interest rates.
Even if the U.S. economy weakens, their priority is inflation.
Seems so. Keeping those long-run inflation expectations anchored is key for them, he suggested. It complicates monetary policy significantly.
Interestingly, while the U.S. is focused on inflation potentially rising from tariffs, India went the other way.
They did. India's central bank cut rates by 25 basis points down to 6% and shifted to an accommodative stance to try and boost growth amid all this global disruption.
They think they're a better place to handle it.
They acknowledge the tariffs are a growth dampener, but believe India's relatively less exposed, maybe due to its large domestic market.
Right. Elsewhere internationally, Japan's INPEX started design work on that Indonesian Abadi LNG project. Petronas has a stake there.
Yes, Petronas holds 35%. INPEX is moving ahead with the front-end engineering design. But the Indonesian government is pushing for a really fast timeline production by 2029.
Which INPEX finds.
Very challenging was the phrase used. These big LNG projects take time. Aiming for a final investment decision next year is already ambitious.
Okay. Moody's also weighed in on the tariffs. Generally negative for Asia-Pacific credit.
Yes, credit negative overall. But they had an interesting observation. Countries with lower tariffs, like Malaysia, India, the Philippines, might actually gain some market share.
How? Through trade triangulation, acting as intermediaries.
Potentially, yes, serving the U.S. market indirectly. It's a complex idea that suggests some potential upside for certain economies amidst the disruption. Economies with big domestic markets like India are also seen as more resilient.
That's a potential silver lining, I guess. How did commodity markets react?
Not well, mostly. Oil prices hit a 4-year low on fears of a global recession dampening demand. Other commodities like coffee also tumbled.
But gold went up.
Classic safe haven move. Gold climbed as traders looked for security amid the uncertainty.
And Asian markets generally.
Yeah.
A meltdown.
Pretty much, yeah. A sea of red as the tariffs took effect. Emerging market equities tanked. Indonesia's rupiah hit a lifetime low. Many Southeast Asian markets were technically oversold. Taiwan also saw a steep drop.
Just widespread fear gripping the markets, and the Asian Development Bank isn't optimistic either.
No, the ADB projects that if these tariffs are fully implemented, it could significantly cut developing Asia's growth in 2025 and 2026. They were already forecasting slower growth in China, and now see Southeast Asia easing slightly too.
So the outlook, according to the ADB, is definitely dimmer because of this. Okay, one last piece of political news. Malaysia-New Zealand trade.
Yes, MITI, the Ministry of Investment, Trade and Industry, announced a goal to boost bilateral trade with New Zealand by 50% by 2030, targeting around RM25.67 billion.
Focusing on specific sectors.
High-value manufacturing, digital economy, renewable energy, trying to diversify trade relationships and tap into growth areas.
Okay, so summing up today's deep dive.
Yeah.
Wow. The market here is clearly feeling the heat from the U.S.-China trade war escalation. Big drop in the KLCI.
Definitely the dominant theme. Even positive company news like for Hibiscus or Sapura Energy seemed like exceptions rather than the rule yesterday. Many good announcements were still met with falling share prices.
Yeah, that background noise was just too loud. We saw significant moves, the CFO shuffle between AMB and potentially Maybank, IPO caution from Cuckoo, a rocky debut for Sumi Soljana, but others like Reach10 still pushing ahead.
And that interesting angle from Moody's, the possibility that Malaysia, with lower tariffs, might actually benefit from trade diversion in the long run.
That's probably the most exciting or at least intriguing takeaway for me today. The sheer scale of this global reaction is massive. The market drops, the way companies are reacting, but also this potential, maybe slight advantage for Malaysia in the chaos. It's such a dynamic situation.
It really is. The immediate impact is clearly negative sentiment, but the longer-term restructuring of supply chains and trade flows that could present opportunities, alongside the risks, of course. How Malaysia navigates this will be key.
So what do you think? What's the most significant piece of news today? Will Malaysia manage to capture some of that diverted trade, or will a global slowdown hit harder? Lots to think about. We encourage you to dig deeper. And of course, if you want to keep up with all these developments shaping Malaysia's financial landscape,
Make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.